Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's March 27th, Wednesday, and we got kind of a light economic day today, or on the calendar here. We got kind of a light day here today. Um, so we're just going to jump right over to headline news. Stock market's kind of modestly up today. It is up, but it's more modest. The topics, of course, are geopolitical. We got the Brexit conversations. There's more votes, and uh, everybody's, of course, watching what's going to happen next. Are they going to have, again, they're trying to have a soft divorce, and right now they're having difficulty getting everybody on the same page as to how they're going to proceed with this divorce from the EU. And this is kind of what's driving the markets are watching here. We're getting down to the deadline. It was supposed to be this week when they make that move, but they postponed it for 2 more weeks. So we'll have to kind of again watch so just more or less prolonging it. So we'll have to see how this again plays out here. But it's looking more and more like that nothing will come to fruition, and therefore it'll probably be a hard, basically a hard divorce here, and that could, as they've been saying, severely move the markets here. Also, we got the yields been dropping quite a bit. On Friday, the uh, 3 month yield passed the 10-year yield, and that they've been looking at as an inverted yield curve, which could lead to a recession. So that's kind of spooking the market, especially with China as well as the European markets slowing down quite a bit. The EU earlier had announced their forecast for their growth from 1.7 to 1.1. US did so too, but not quite as big of a cut. It was from 2.3 to 2.1, so about 0.2% is what they dropped it by. And part of it, of course, we had the government shutdown, which had slowed the markets a bit as well. We do have other signs of slowing of the economy slowing as well, but not to the extreme as what we're seeing overseas. So let's see how this is playing out in the bond market. The bond market's up so far 13 basis points, which is helping us out. This will translate into better pricing, so pricing should be better today than what we saw yesterday. Yesterday was kind of pushing. We were touching around 13, 14 basis points up, and then it settled up, closed at 6 plus 6 yesterday. When we did this yesterday morning, we were up like 2 or 3 basis points, and looked like it was trying to make its way up, but it didn't. It settled off the high. So far this morning, it's kind of taking that same run and trying to push up further at 13 basis points. And then here's what we're talking about, the 10-year dropping. We're just, it wasn't that long ago. We were in the 260s. Now we're down 2.38 right now on the 10-year yield. So the yields are dropping a bit and kind of pointing towards that inverted curve. Again, that's the 3 month. Most of the times we'll look at the 2-year, which is not quite there, but it is. They are fast approaching. We're in I think the high 220s on the 2-year. So again, if this continues dropping and the 2-year rises, we'll have that inverted as well. So that pretty much wraps things up. Rates are a little bit better today, which is obviously a good sign for those who are in the market for either refinancing or purchasing. And we'll see how long this continues. This could help us out once the Brexit happens. If it's a hard divorce, a lot of that money. Some of this money is coming into the concerns over the Brexit, so they're getting out of the stock market for flight to safety and moving over here. So we're getting a little bit of that Brexit scare, which is kind of helping out mortgage-backed securities as well. All right, folks, you guys have a great rest of your day. Thanks so much for watching, and we'll look forward to see you guys tomorrow. Bye-bye.